What is up, everybody? It is Wednesday, my dudes. It is Wednesday, June 2nd. I didn't trade a whole lot today simply because my account is currently being moved from margin to cash, or I'm sorry, from cash to margin on Webull, so I'm like locked out of it essentially. So I traded with mostly my mom's account today. So my sizing and stuff was a bit smaller than usual, but the trades are ultimately still the same. So I did take a few different options and things like that towards the end of the day, but we did have some decent moves we can talk about. So we'll go ahead and do that. So the first trade I took today was actually on BlackBerry here. My zone was, looks like this was about 8 a.m. my time, so it would have been close to 9. 1331 down to 1310 was my zone. Now, where did I get those levels from? You can come and look at the pre-mar or the after hours from yesterday and see that pretty defined level right here, pretty defined level right here. You come and look at it over here, and perfect areas. My stop loss was going to be down here at 1292. And just like yesterday, I was talking about how I like to play patterns and incorporate patterns into my zone as I build my zones. So something like that, yeah. Anyhow, I was working off of the idea that this was an uptrend, like this. Now I know that it's a lot of it's a lot of lines. You'll have to just bear with me. Close to that. I mean, it's not perfect, but that's essentially what it was. So that's what I was looking at. I wanted the zone that I created to have confluence with the possible trend line support. That way, if it did dip into my zone, I could risk the trend line fail. A lot of good action there that corroborates kind of my idea on that play. So yes, yeah, that was the plan. My profit target was 1355 based on this high here. And so it came down. This is pre-market. Came down, filled the zone pretty darn well. Filled half of it. Of course, you do descending bids. Now, I was on Twitch talking about this stream as I was streaming this and discussing it as I was kind of trading. But yeah, it came down in here. I would have 4 bids, 1, 2, 3, 4 set. Depending on the heat of the market, I will either have heavier size at the bottom or kind of spread out evenly. Just kind of depends on your risk tolerance and what you're looking to get out of it. Now, it is pre-market. I tend to be a little bit more conscientious of that. I actually so much so that I actually didn't even take this trade. I made this zone, talked about it. I think some people that were watching in my Twitch stream might have taken it, but I actually didn't take it because the account I'm dealing with is a little weird. I'm not a big fan of pre-market to begin with, but the trade is ultimately still the same. Pretty easily defined risk down here. You're risking 20 cents essentially to make 35 cents or whatever. If it did come to the bottom, you were making 45 cents or something to that effect. But anyways, a really good move. You look at the higher time frames, and the 5-minute says all you need to know here. Dips into the zone, gives you a little nice tweezer bottom that respects the 20 SMA. Really, really decent. Pops right back out to your profit target. Now, this is why I have reasonable profit targets. I don't hold every move for high of the day, because when you have these run-ups and then these bounces, you can't expect every single one to take you higher than the last one did, especially in pre-market where you can't really plot the volume nearly as well. But the point is, a lot of times what I'll do is I will, let's say in pre-market or after hours, I'll prioritize the majority of my size at the bottom so that if it does fill my zone entirely, my average is going to be really low to here. And then as soon as it breaks the top of my zone, I'll start to scale out. Just because it protects my downside a little bit. Pre-market and after hours are very illiquid. So, that's no secret. So this is what that trade looked like today as it was kind of taking place. You can see here. So yeah, ended up being a really great trade. really, if you had taken it. I again, I didn't, but the look is still ultimately the same, which is the important aspect and definitely the thing we can learn from. So let's see what was next. Out at 34. Oh, okay. So I ended up trading at the open today for the first time. Now I was in super, super light, right? Super light. And the reason for that is because, I was on like a little baby account comparatively compared to what I'm used to. And being in my mom's account or my small account or whatever, I didn't want to risk a whole lot. So I actually made a zone at 8:30 exactly. So right at the bell, I said 37.14 to 36. 37.14 to 36. Right about there. And I made that based on, as you can see here, this level on the 10-minute chart. And wouldn't you know it, price at the open, it's even a better look right here. Price at the open came down to fill this zone perfectly. Well, maybe not perfectly, but pretty damn well. I think my stop was at 35 or something like that. But it came down here, and then check this out. Came down here, immediately went up out at 38.4 for a $2 move. $2.40 move from 36 to 28.4 right here, or 38.4 rather. Boom, real quick. 4 minutes, you get a $2.50 move. You're done for the day, right? Like, that's crazy. Of course, I was in 30 shares or something, a fraction of what size I would usually use given the stop loss and everything. But anyways, my point is that you can see that it came down to fill, went up, you sell. The very next candle came down to, mostly fill, 2/3 of my zone again, half of my zone again. And you could have taken that for another $2.40. Another, you could have taken it for $6 almost if you took it. I actually didn't take it the second time, but I was kind of discussing it on my stream and in Discord as it was taking place. I said, oh, there's AMC, another zone fill, another $2 move. And then I said, now it's a $3.50 move. And then obviously it just kept going up there. Now, I will, since we have AMC pulled up, now this isn't something I talked about in Discord, but it was something I talked about on my stream. And somebody asked me to highlight it as I kind of discussed it. So if you want to watch that, I will, you can find it on Discord or my Twitch or whatever. I guess I can link it. If I don't want to be lazy, I can link it in the YouTube comments or the YouTube description or whatever. But I was discussing how a mean reversion trader, he's a short seller, a real impressive short seller. It taught me a lot. How learning about his process and that side of the trade changed a lot for, how I address the long side of the trade. And so I've kind of discussed it in chat here or in my stream here. And I said, listen, look at this. Once we see AMC open, I want to see what the volume looks like and I want to see how high it goes. Because if we can identify a lower high, then that is primarily what shorts are going to use as, especially on a ticker like this that's running crazy and shorts are licking their chops like, okay, the backside of this is going to be a huge rug pull. We're going to make $1 gazillion, right? But I discussed it in chat. I said, the reason I don't want to take this long after that move that I had already taken at the open, up to here or what have you, is because, I want to see price show me, where it believes the top is. And then if I want to take it long, I'll address it on either a high or low confirmation for a continued uptrend, which, came later, or I will consider shorting it here. So I ended up taking puts on this play as I discussed it. And I did a better job of explaining it as it was happening live because, in hindsight, it's obviously very easy. But I said right here, okay, look, if you wanted to if you were a short seller and you were looking at this action, what would you do? You would wait for price to come up here. You would wait for it to show you a peak, show you a little bit of reversal action. And then I said right here is where you would basically get the confirmation that, yeah, this is moving this way. This is moving to the downside. It's not just a dip. It's a big candle, that big engulfing candle that's selling off. The buy volume is tuckering out. Price doesn't look like it's going to high a day, which is, an extra $3 away. So I told my people in chat, I said, listen, if you were a short seller, what you could do is you could risk this candle here, this high. You could add in this zone. And when I was saying this, it was right here. So like none of this existed yet. You could have added in this zone, and you could have risked up here, right? Why risk up here? Well, you risk up here because this is the top. And if your thesis, your plan is that I'm shorting it because I believe this is the top and we're about to see the extended downside, then, if that is forfeit, then you know that your plan was wrong. Your thesis of this being the top is wrong. So there's no reason to be in the trade anymore because, that was the structure that you based your idea around. So very, very easily defined risk. 50 cents defined risk. I mean, you're looking at potentially the range on the day is very significant if you manage to catch it up here. It gives you a safe zone to add in this price action before you're, and it ended up coming down, filling my zone almost perfectly, and breaking through the 200 SMA and coming down for like $3, $4, something like that, before it did end up reversing and going on the craziest run of all time. But my point is that it was something that I was able to identify and talk about, and then you could set defined profit targets, based on pre-market levels as well. So you could have scaled out there, scale out a major indicator like the 200, move your stop up to break even. You're risking nothing at that point, and you kind of scale out as it goes. That was an amazing short position. Again, I'll link the highlight I made of my stream in my YouTube description so that you guys can go and kind of watch that as it happened. Simply because you get a little bit more information, kind of hearing my thought process when you see, this price action. Now, when you see it all day, it's very easy to be like, yeah, I called that right there. I knew it was going to happen. You know what I mean? But yeah, that ended up being my final trade on AMC for the day. I ended up not touching it for the rest of the day. It went batshit insane. And it's very important. This is actually an important thing to say. It's very important for new traders. I had a couple of people actually message me, and they're like, dude, how did I manage to do badly today? It seems like a day where like everybody made money. Everybody made money. How come I lost? I played AMC, and it went up crazy. It went from $35 to a gazillion dollars to 70 something dollars. How did I lose today? And it's important to not think of it in those terms, right? Because when you sit back and you say, yes, AMC went from $35 to $70 today, you are appreciating the process of how it got there, because it didn't go from $35 all the way up in a single candle to 70. It went up to 60, and then it crashed down a $10 in a single candle, and then it popped up again, and then and then you lost another $15 in a single candle. Like, there are many opportunities for you to lose. Just because a stock is running crazy on the day doesn't mean you are invulnerable from losing on it. The only way that you don't lose on it is if you take like a swing position with 5 shares, except that your downside is the entirety of that investment, and just ride it for the whole day, right? But, as day traders, especially as a scalper like myself, that's not what we're interested in doing. Like, the allure of being rich, the allure of being like, oh my God, this can make me rich, will oftentimes make you stupid. And a lot of times what ends up happening is you get burned and you're just left with being stupid and none of the riches. So I will oftentimes, on runners like this that have gone just crazy and there's no technicals that you can make sense of, the pullbacks aren't coming back to key levels, it's just, it's just gone and there's no rhyme or reason, it's just doing what it wants to do. Those are the worst possible stocks to trade, because there's no way to form a thesis, there's no way to manage risk. So it's very under talked about that, like, sometimes these 5,000% gappers or whatever can be the absolute worst things to trade, because they can blow your account up so fast. You can actually blow your account up easier on a stock that's running 1,000% than your normal 50% runners or whatever, just because the risk management is hard to manage, it's hard to figure out, it's hard to identify, and then you got to give yourself range on hard stops. And the stock has shown that it can wick $10 in a single candle. So how do you size and still protect yourself from getting wicked out? Like, you just don't, right? So the solution is to watch. Maybe take very small size. If you absolutely have to play it by a single call option or something, and you're risking a max of whatever that value is, or you're risking a max of whatever the investment of 10 shares was or something, if you absolutely have to do it. But if you're trying to make a living, a career out of, trading and being consistently profitable every day and making smart decisions, then I promise you that, halted tickers and tickers that are running, with no rhyme or reason other than the fact that they're running, those are dangerous things to try to identify, because they throw technicals to the wind. And as somebody like myself who's entirely technically based, there's nothing I could have done that would have been like, yeah, this is gonna unhalt and knife $10. I'm gonna catch this sweet move up. Like, there's nothing that that I could have done or prepared that would have been like, yeah, I could have totally seen this coming, right? So probabilities and giving yourself the best chance to succeed while accepting, like, I have this much risk if it fails, is what keeps us in this game. And on a stock like this, or GameStop, or whatever, on days like these, that's just not available. So do yourself your account a favor, move on to the next best thing. That is my advice for anybody who, feels like they're the only person in the world who lost on something like this today. I've lost on plenty of these insane runners before. So trust me, you're not alone. That is my best advice. Same thing with tickers at halt. Just give them time, come back in an hour and see what they're doing. If you would have given AMC 30 minutes, you would have seen all of this. And I bet at the end of it, you would have been like, hell no, dude, I want no part in that. I don't know what it's going to do next. And if you were brave, or you were in small enough to where you weren't, afraid of what the downside could look like, or if you got in, 2 months ago or something, sure. But if you're trying to, build a longevity-based career out of day trading, then I will tell you these things are traps, because they look like, oh my God, I can make my year in a single trade. But in actuality, they are, oh my God, my account is gone. So that's my rant on those type of runners for the day. What ticker it is irrelevant. AMC, GameStop, whatever. Last year it was Kodak and SPI. Like, it doesn't matter what the ticker is, right? When it moves that fashion, that's the reality of what's possible. So UONE, I called out a bunch of zones for. I don't think a single one got filled. It did end up taking SLNO. Yes, right here. So SLNO, I identified this zone. Obviously, it's still here. This was my max risk. You're looking at a 5-cent risk downside. I was shooting for, 159, so that would have been close to 12 cents or so. Which, again, it's very easy to be like, 12 cents, dude. Why are you even bothering? But it's important to understand that the stock went from, 126 to it had a 40-cent range on the day, right? Huge move, huge gapper on it, but from the low to the high is 40 cents difference. So if you're able to squeeze out 1/4 of that, that's pretty respectable, And I think that people oftentimes get too hung up on like 10 cents, 20 cents or whatever. But when you're like, or you mean 20% of the move on the day? Well, this ended up being over almost 50 cents, 50% of the total move on the day you could have caught right here. Close to it. That's different when you put it into that perspective. Yeah, I managed to catch half of the ticker's movement today. That's big, right? So don't get too hung up on it's 15 cents or it's 20 cents or whatever. Especially because if your risk management is the same, that you just size twice as big as you would on a 10 cent or a 30 cent gain or whatever. But yeah, zone came down, filled. Not a whole lot more to say about it. The zone was based off of, I have no idea actually. What was it based off of? Man, I had to go back and watch my Twitch stream. I don't remember. Usually I can identify it pretty quick, but sometimes Webull charts Excuse me, ended up being different. So 1.5 is obviously the half dollar. We can call it that. But where the hell did this one come from? I don't know. Usually it's easy to identify, but sometimes Weeble will finish a candle, and then the candle that happened previous will change a little bit, and I'm like, what? So it's possible that it was supposed to be like, maybe like down here or something. I don't know, but that was my zone, and it went to high a day. It went to high a day, so really really cool. I mean, obviously it didn't come enough into my zone to fill me with a sizable position, but it came down, respected the 20, respected VWAP, good signs. 5 and the 10, you're looking at this exact same situation. Respective zone, respective VWAP, respected the half dollar as well. I mean, this is $1.50, and it pretty much didn't come much lower than that. All good signs going forward. You would scale out, absolutely. If you hadn't already scaled out in full up to that point, you would absolutely scale out over high of day for a really decent little gainer. UONE did end up paying. That's right. Let's see if it's still on here. So this one was... Oh, this is the wrong ticker. Darn, I was hoping it would still be on here. It's okay. We can just pull up the picture. So this one was on my stream as well. 11:59. What a terrible quality picture. I think it was based off of this. Oh, yeah, I know what we were looking at here. We're looking at this trend. I was explaining how to identify when a trend is over, when it's just pulling back, what are key things to look for. That is also in that video where I discussed the AMC short that I'm going to link in the description or whatever. That was also in there as well. So I actually think it ended up being like right here was my... So, yeah. So my zone was right in this range. And as you can see, it ended up filling my zone. So what I was discussing on my Twitch at the time this was taking place is that just like we did earlier with that other example, or yesterday when I talked about bull flags and ascending triangles and things like that, is when I'm taking into a consideration a pattern or a potential pattern break or a setup, like a flag or a triangle or whatever, in this case a trend, I want to give myself a zone that will try to incorporate, the support levels of that pattern, right? Because, I want to give myself the best advantage I can. So I said, right here, I'm going to make a zone where I believe is a good pullback zone based on my pullback system, and also gives me the benefit of utilizing trend support. That way, if it does break through support, I can have a really defined risk or defined stop, down here below VWAP, below 20, below this trend fail, below previous highs of price action. A lot of things got to go wrong, and there's a lot of instances where I can confirm, okay, this is wrong, I went out, and my risk is very, very defined. It ended up, filling the zone quite well, rubbing against the trend line support. This is a situation where you can't be too particular about the trend if it's not like an obvious like fail. I was trying to give it a little bit of space because, some people can just draw a trend marginally different than someone else. And, you have to give yourself a little bit of wiggle room on the lines that you draw, because, no one's perfect. But it ended up coming here, interacting. I actually left for work, so I watched the rest of this one on my phone. I would scale out here, and then, you would scale out wherever you had shares left, depending on your... how high you wanted to ride it and where your stop loss was. But, I mean, it doesn't get much better than that. Gorgeous trend. You caught a pullback that came to support of the trend line. I mean, there's just so much right about this. It looked great on the 10. I was kind of discussing it in chat, how it was like, okay, it would run up, trade sideways, run up, trade sideways, run up. As it started to dip, which is why I said if it does go up, this will be the last rally based on the fact that this has been the first significant pullback. And when you're dealing with these really sharp trends like this, you have to keep in mind that if you end up chaining 2 or 3 5-minute candles that are red together, the trend is so sharp that that'll fail the trend. Even if price doesn't come down significantly, if it just stalls out long enough, it'll break through that trend. Or the first instance of significant selling will break the trend, just like this. So it sharp, it went up, it respected, it rubbed real close, popped out what it had left, based on biggest volume of the day. And then as soon as there was significant enough volume or significant enough selling to break the trend, it was an all-day fade. All-day fade. Right? So it's important when you're looking at trends, and trends are my favorite. Trending markets are when I when I evolve into my final form, essentially. So I'm very stoked that things are starting to heat up. But yeah, trends are what I do. They're my favorite thing, right? So you get used to seeing after a while that like the sharper the trend, the less wiggle room you have for selling. Like if the trend was like this, let's say hypothetically, what the fuck? Okay, we're gonna do it over here. How about this? Let's say the trend looked like this right here. Let's clear everything. Let's say you drew a trend line that looks like this, and price goes up. It has a whole lot of room where it can sell off if it's a really, not so sharp trend. Or if it's very sharp upwards like this and it goes up, as soon as it has, it doesn't have as much space to be able to come down before it breaks that line, right? And when people see that pattern break, they'll sell, and it'll commit to that pattern even more so, or the failure of that pattern in this case. So, my favorite trends are ones that are a bit more relaxed. You got range to go up and come down and up and come down without breaking that trend level. And the sharper that you get it, the less wiggle room and the less follow through you'll have, because if it goes up, it can't afford to come down very hard before it's failing that pattern. So that is something to keep in mind when you're looking at trends. The sharper the trend, usually the more dangerous, or the easier for it to fail. That's the general rule of thumb there. So UONE, that was a good one. That was it, I believe. The rest were just a couple of small options I had. That I was just playing for funsies. I ended up taking one after hours trade on my mom's account. It was GTT. What the hell? Okay, GTT. So I identified a pullback zone here and here. Right? Is that where it was? Oh, no, I'm sorry. 253 to 246. So 253 to 246. Oh, so it must have been the top of that candle. What the fuck is this? Where the hell are we? Okay. See, I like that Thinkorswim is way easier to use, but alas, here we. Oh wait, their extended hours was off. Okay, so here we are. we got there. We made it. So I made this zone here based off this previous price action that you see over here, and my defined stop was down here, I believe, 237. Yep, 237, and my profit target was at 267, which would have been right there. So price came down. It filled me. I was watching mainly the 5-minute candle. Or the 5-minute chart, because I'm obviously on my phone at work at this point. Have been for like the last little while. Price comes down. It fills me. Gorgeous, beautiful fill. Now, how did I make these zones? Why did I not try to buy the dip up here? Well, because it's after hours. It's kind of below VWAP with some of these candles. Which tells me that if it can't hold that interaction, if VWAP isn't supporting it up, and kind of holding it up and giving it strength to stay up here, then it could come down. And where's the next logical place for it to come down to? The highs of previous price action before the close. So I assessed my zones over here, and here we can just pull up the picture. So yeah, this is what I assessed, and it ended up filling me. You can see, respected the 20 SMA right here on the 5, and then popped up. I ended up scaling. So again, like I mentioned earlier with my pre-market, I had the emphasis of the bulk of my bids at the bottom of my zone. So that way, when I did get filled, my average was quite low. My average was like way down here. Protects me from, gives me less downside than having my average up here. And it also means that as soon as it pops out of my zone, I would start scaling. So, I took off 20%, 25% or whatever, and continued to scale it as it went up. I'm not really giving it an opportunity to come against me. Now, sure, I would have made a lot more if I bought it here and sold it here. But in after hours and pre-market, when it's such an illiquid environment, there's like not a whole lot of volume, not a whole lot of liquidity, and spreads can sometimes get pretty extended. I don't want to chance it. I'm not going to hold for an extra $100 or whatever, because the downside can leave me with a lot worse situation. So I ended up taking 6 cents off. I take some size off at 7 cents, 8 cents or whatever. Then at 10 cents, then I sold at my final profit target, and I had a full trade. But eventually it ended up going to over 3. So this would have been the entry. Yeah, for the after hours. I mean, that was the pullback to get in on. Now, obviously, I'm on my phone. I was in small size. I hate after hours. So I took my profit where my profit target was. Sometimes, that hurts me, but more often than not, I'm going to trust my system because I know what it's capable of, and I know the likelihoods and the probabilities and all that stuff, right? So I'm gonna do it how I'm supposed to, and if it could have been squeezed out for a little bit more, then so be it. So be it. You live and you learn. Maybe that's something we can address in the future. But not a crazy packed day. You can expect the rest of my week to probably look like this. I'm trading with kind of my hands tied a little bit, waiting for my account to be switched over, waiting for my money and all that stuff to be activated so that I can start really trading with an above PDT account and unlimited trades and all that good stuff. So. And then for the meantime, we're just going to be doing it like this. I hope that is okay with you guys. I hope that you can still, take some information from these and, hopefully it benefits somebody. I am streaming every morning on Twitch. We talk a lot in the pre-market. I'm happy to answer questions there if you are more comfortable using that as a medium or as opposed to Discord or something, then feel free. My Twitch is twitch.tv/professor_Palmer. So, just like my YouTube, but with an underscore in between the two words. But yeah, that is it. Obviously, you guys can always reach out to me anytime if you have any questions or anything like that. I hope all of you had an amazing day today, and I hope tomorrow is even better. I will see you then. Let's finish this week hella strong. We got 2 more days, and the market is looking good. So hopefully at the end of this week, we're all in a much better shape than we started. Be well, guys. I'll see you tomorrow.